Good afternoon, everyone. This is Henry Gambell with SimplerOptions.com, and in today's free video, I wanted to follow up on some of the ideas that I'd shared in Apple. So in Monday night's free video, I'd given you some ideas that you could look to apply to Apple when they got ready to report on Tuesday afternoon. Those trades, essentially the the two main ones that I shared, and the one that I think that is most interesting, the one that's most interesting is probably this unbalanced fly on the call side, and that's the one we're going to dive into. I'd also mentioned the idea of just doing more of a basic bearish butterfly, relatively inexpensive debit. You can see that these were executed just prior to earnings and then start scaling out of them the day after. So the bearish idea and playing it down to 145 was pretty straightforward. But where things start to get interesting is looking at that unbalanced where we did it with the 147 call, and now we're sitting here trading at 148.69. This is exactly where you want to be with this type of a strategy because it allows you to leg out of it in a really advantageous way by simply selling what would be the 147.150 call debit spread. So when you look at this and kind of think about the structure of it, you can see how if we sold these 5 of the 147s and then bought 5 of the 150s, well then that's going to leave you with 10 call credit spreads short at 150. Now if you execute this spread by legging out of it, you have to be comfortable with the idea that essentially that we're going to close below 150. So right now we've got about 90 minutes until the cash close. And I feel pretty confident with that idea. So in order to exit the position, all I need to do is come back over to look to be, essentially what I would like to do is to sell, so short a call vertical, and then I want to adjust this so that my strikes reflect what my position shows. So I know that if I'm long the 147s, those are the contracts I want to sell. So I drag that down into 147, and then I want to buy back the 150s, so let's drop that down one bit, and now you can see where the spread is going, 147 by 150, and the spread's going at $1.50 credit. So it opens at a credit, we sell it at a credit, and if I can get this here at $1.50, then that will generate $1.60 of profit on the trade. So when you begin looking at these, and if they seem a little like why would you do that for a 10-cent credit? It's because you're taking in the credit trying to give yourself that risk in only one direction. And then of course if it comes back up in closer to 150, then that's just so much better as well. So if I come back to this and look at my trades again here, kind of scroll up, we can see my working order here at that specific price. Now you'll also notice that I've done that for a single contract. So I can right click on this, create a similar order, and then just in the idea of kind of some price discovery and trying to scale out of these, saying okay, where will they actually fill me? 143 is the natural, 148 is the mid. I should probably be able to get filled at 147, and there's my fills. So the idea with that is that it's just another way of legging out of those positions. When you have it trading at this type of a price after the strategy was suggested on Monday, that's exactly what you want to see. And then you can save yourself some commissions by leaving the 150, 152 half call credit spread to expire worthless. So I hope that helps, gives you something to look at prior to the report, see how it played out, and then also look at exiting the trade, and we'll look to do some more of that with earnings next week. One other thing I wanted to make sure you were aware of is that Carolyn will be doing a class this weekend on how to predict price swings on any chart. So as you know, her work has been a huge part of what I've incorporated into my trading, and I have found it to be extremely helpful. She is the best Fibonacci analyst that I have come across, and I think that this will be a very beneficial class for people that are familiar with it and for those that are looking to expand your knowledge in it. So the class itself is going to be on May 6th from 12 to 4. Then if you'd like to add on some live trading with that as well, you can do that also. And then we also have an option for you to add on some of her service if you would like to continue the study after the course. So I hope you find that as helpful as I have. If you have any other questions, let me know, and we'll see you at the next free video.